Welcome to Modern Traders. I'm Ben. I'll be your host. Before we get started, I want to invite you over to the free Discord. We're going to do a daily watch list, call outs, free resources, news catalysts, FDA approvals, what have you. And we put a lot of work into trying to get some good info out there for you. So if you get anything out of it, please remember to like and subscribe. Give us a little love with the YouTube algo. Well, it's an exciting time in the world of cannabis investment. As the map to my right illustrates, there are only 3 remaining states that haven't decriminalized or legalized in some form or another cannabis in general for recreation or medical use. And as the states continue to fall like dominoes, the push and momentum toward federal legalization as a whole becomes more and more inevitable, and sentiment, public opinion on the matter becomes more and more clear. You'll see that over a third of Americans say that legal weed is actually the reason why they moved to their current state. Now, this study is a little bit inflated, not terribly accurate, but it does illustrate the point. And there is an issue with the level of legalization state to state, but things like these smoking lounges starting to pop up are, showing workarounds in the works. And now we're seeing cannabis infused ice cream, and I mean, to me, that just cherry on top proves the point. It's got to happen any day now. So as investors, now's the time to be securing our positions in the sector and getting ready for the takeoff. And like I said, as the federal legalization news is bound to send the entire sector skyrocketing as a whole, now is the time also to be singling out the companies that have the highest potential for longevity and just being successful against their competitors. So which brings us back to Hexo Corp. Now, we did discuss Hexo Corp a while back. Hexo's a Canadian-based marijuana company formed in 2013 for medical cannabis and branched out into recreational in 2018 as it became legal in Canada. They do have a pretty large portfolio, and we discussed in the last video that they were in the process of expanding the company of acquisitions, mergers, taking over other companies. And we have seen since the crash in stock price of about 30% on the news of issuing new units for a public offering. So we need to discuss public offerings in general. Now, we do pretty much 100% of the time see the share price crash when a company does announce a public offering, and it does short-term dilute the shares. But the thing about it is, on one side, you have companies that take advantage of the spike in share price because of retail interest or short squeeze, what have you, and they use the proceeds to buy a new corporate jet, to up the CEO's salary, to give bonuses to executives and board members. And the other side, you have companies that do a public offering because they need to raise proceeds to put back into the company for expansion purposes and to better the company in general. And this is the case with Hexo. Now, the acquisitions and purchases we talked about in the previous video are very expensive. The most recent of which is the Red Can purchase for $925 million, which is $400 million in cash and $525 million in Hexo shares, which will account for a lot of the diluted shares that we were talking about. And this is the kind of purchase that's going to just catapult Hexo into a much higher position. You see, they held the number 3 spot in recreational cannabis use in Canada before the announcement, and they do expect this to put them in the number 1 spot. And the completion of these mergers and acquisitions is going to give them a 17% market share, which puts them ahead of even Tilray with a 15.5% share. And all of Red Can's oils and capsules and whatnot will be added to the Hexo portfolio. And we did see the 48 North acquisition closed just recently, as well as a Zenabis Global acquisition that's expected to close in the near future. And to also strengthen the foothold in the U.S., they just acquired a 50,000 square foot cannabis production facility in Colorado to just be a position for when the federal legalization does come through. It's important also to understand here is that the Hexo shares that are being given to the Red Can shareholders, they're going to have a lockup period of 24 months. So it's 2 years till they're going to actually be able to they'll be able to sell any more than 1/24th of their holdings. So that's going to keep that dilution problem from really being an issue at all for at least the next 18 months to 24 months. And during that time, we'll see Hexo's profitability skyrocket based on these acquisitions and the eventual federal legalization. Taking a look at the financials just real quick, we see that the revenue has just been increasing huge year over year, from $5 million in 2018 to $50 million in 19 to $80 million in 2020, and keeps on growing. And obviously that growth is going to be compounded by these recent acquisitions. Now, taking a look at the graph, you can see that Hexo did have just a enormous run up of all the way up to highs of around $11 before pulling back cooling off to this $5 support level, and ultimately breaking the support there and pulling back to the 240, where it has since established a pretty solid support. But the share price offering was at 295, so we do expect to see that rebound to that $3 level very quickly. And like I said, with the expansion and then the eventual federal legalization, this is a company that I think is going to have no problem getting to the $20, $30 level in the next few years. Definitely something to have on the radar, guys. Until next time, I'm Ben, Modern Traders. Thanks for stopping by.